Hello, ladies and gentlemen. Welcome to the show. Listen, I hope you guys are all doing good out there today. Good success to all of you. Listen, Bitcoin cryptocurrencies. The market, the Dow Jones and the S&P 500 and the markets, they are going through a period right now where they're going through what I would call a blow-off top. They're topping out. And the Fed is in panic mode right now. They're injecting liquidity into the bond markets and into the... I think they're actually outright buying stocks. You know, they're doing whatever they can to support this system. But, you know, when the real masses in the system really starts to sell off, it's like a dam breaking. You just got to stand back and watch it happen. You know, even if you're the Fed, you can step in later, and you can, after the market is settled back down again. It's like after the waters all broke out of the dam and it's washed everywhere, then you can go back in and repair the dam. But that's going to create deflation, and in order to fight that deflation, it's going to require a similar action by the part of the world's central banks. This is exactly what's going to happen. We're going to go through a blow-off top. Then we're going to go through a huge correction / crash. Deflation's going to come. The Fed has a mandate, a 2% inflation target. When they see deflation, it's going to take them a little bit to react to what happened. The crash, or the monster correction, or whatever you want to call it. We're probably going to see 1,000-point drops in the Dow when this happens. It's not going to make it. It doesn't have enough steam in it to carry it through the election cycle. It's most likely going to happen in the first quarter of 2020. This correction I'm talking about. And what we need to be interested in on this channel is, what is going to be the effect on cryptocurrency? Well, let's start the charts and take a look right here at what's going on. This is what they're going to flood into, right here. The U.S. dollar index, you know, this is what they're going to flood in. They're going to flood into the dollar. It's already starting a little bit. Let's back this chart up a little bit, and let's take a look at the 6 month. In the 6 month, you can see it's starting to pop up. The dollar's starting to pop up on just on the end of this chart here. It's starting to. I think this is the beginning of a rally in the dollar. It's coming. This has everything to do with the situation that's going on, heading toward a deflationary. Now, I forecast a deflationary spike event in my channel going back years now. It looks like it's very possible that we're going to get this deflationary spike event. And what's the effect on Bitcoin? Well, let's take a look at what it's doing to gold and silver right now. Real time. Look at how it's knocked the price down on gold. We were up well above $1,500. Now we're at $1,465. Talk about a smackdown. Take a look at silver today. Look at the smackdown over the last few days. 1704. I mean, we were down into the 16s. There's a 16 on the number. But what's it doing to cryptocurrency? The same effect. It's only holding cryptocurrency back. I think cryptocurrency was just getting ready to take off. I think it was on the launch pad, and I think this little bit of deflation is coming now. And this is with the Fed stimulating like crazy through the repo market and buying bonds. But at this point, there's no real confidence in the Fed anymore. Everybody out there is starting to learn that the Fed is behind the curve. They need 5%. In order to fight this recession, they need 5% interest rates on the low end of the yield curve. And they started out with 2 point something. Now they're down into 1 point something, and they're lowering rates. They're firing off their ammo. But the thing is they're a day late and they're a dollar short. The Fed hasn't got what they effectively need, the tools they effectively need to fight this recession. There's only one tool they have left, and that's print money. This is all leading to what I call the Great Print. But we're going to have this market is going to top off and going to fall before they start the Great Print, because they're already doing what they need to try to prop this market up, and all they're actually doing is creating making the market go into a rally that's going nowhere. Except a crash. And this is where we're headed. Now, you're still interested. What's it going to do to cryptocurrency? Well, I can tell you this much right now. Cryptocurrency's holding up under these pressures so far better, and this is amazing, it's holding up better than gold and silver as an asset class. You got to realize the feat. Even though cryptocurrency's staying at this price right here, this price level, you got to realize with these pressures that are on the market right now, what a feat it is for cryptocurrency to hold its value under this pressure of investors out there right now panicking and moving into dollars. Moving out of treasuries even. They're hanging on to their crypto. This is amazing to me that they're hanging on to their crypto when they're starting to sell off on everything else. The market's going to top out. I mean, if you guys are investing in the market right now, I'm not a financial advisor. Not allowed to give you guys financial advice, but my personal opinion is I wouldn't touch that market right now with a 10-foot pole, because the little bit you might make, 3, 4, 5%, in the leading edge of a crash, your downside risk is enormous. It could be 50, 60% downside risk, and you're willing to risk all that for 2, 3, 4%, whatever we have in this blowout top? I'm not sure about this, what I'm going to say next. I'm really not sure. But it's my gut feeling that we could make it through Christmas in this blowout top in the market. In other words, the market could continue to go up right through until the new year. It's a good high probability, but then again, on the other hand, it could fall tomorrow because it is in a blowout top, and these sort of things, you never know when the waterfall is going to begin. It's like you're heading toward the edge of Niagara Falls in a barrel, and you got your eyes shut, and you just don't know when you're going to feel that feeling like you're falling down an elevator shaft. That's the way with this market right now, guys. Quite seriously. You got to really, as an investor out there right now, everything's on a knife edge. Everything. The investors out there right now, capital's starting to fly around in the system, just like it did before the Great Depression. It's that leading edge that's leading to something enormous that's coming. It's like when the water recedes. By the way, if you're ever out some country, I don't know, and maybe you're having a vacation on the beach or something, right? And an earthquake occurs nearby, and you're on the beach and you see all the water go out. The water recedes out. That means a tidal wave's coming. That's what's happening right now with this blowout top. Everything looks fine. Everything looks peaceful and everything. The tidal wave's coming. Fair warning to you guys if you're into paper assets. And the reason why all this is happening, you got to go back to 1914 when they had secretive meetings in Jekyll Island, and they passed the Federal Reserve Act. What they were really putting in place was a Ponzi scheme. A Ponzi scheme that had to come to an end at some point in the future. Well, it tried to come to an end in 2008. And how all Ponzi schemes end is they grow exponentially. My father's got Alzheimer's, Was into the hospital today. I was trying to explain this to him. And he looks at me from the bed. He's laying on the bed and he says, one, 2, 4, 8, 16, 32, 64, 128, 256, he says. I said, Dad, you got it. I was explaining to him what they're doing with this in the how they started this Ponzi scheme, you know. And the thing is he got it. That's exactly what they're doing. It's growing exponentially. It's doubling the amount of money, amount of currency they have to put in the system to keep this Ponzi scheme up and running. And he got it. He understood it. Even though he has Alzheimer's, he actually understood that this is coming to a conclusion where they just can't keep it going in the end. They just keep dumping money into it. Well, it hasn't come to that conclusion yet. Just like in 2008, we're reaching a pivotal point right now where they're going to have to inject massive amounts of money to keep this going. And there's no other alternative, because to let it crash into deflation would mean the end of the system. Everything. And so they have to keep the Ponzi scheme going. And so that means that they have to keep doubling the amount. They have to keep adding to the pile. And so we're going to get the deflationary event, just like we got in 2008. That was a deflationary event. What did they do? They all come running in, poured tremendous amount of money into it, and they made it go for a few more years. Well, they're going to do the same thing again. Except this time, it's going to take 10 times more money to keep it going. But they don't have any other choice, because to let it all fail would mean their jobs too. They don't want to lose their job. You guys think, a lot of people out there say, oh, these guys at the Fed are a bunch of dummies. They don't know what they're doing. Wrong. They're not dummies. They're some of the brightest people in the room. And they know exactly what I'm talking about right now. And they know they got to keep it going. So when it heads into... In fact, they're trying to stem this off, but they're not doing enough right now. And this is gonna break. And when it breaks, then they're gonna do more. It's gonna be a reaction to it breaking. It's gonna break everything, but they're gonna come in with money. And money is gonna repair it. They're able to do this. They did it in 2008. This time it's gonna take 10 times more money. They'll be able to do it again. It'll buy us a year or two down the road. And then they're gonna need to do it again, and it's gonna take 10 times more again. They're going to have to keep doing this until we go into the hyperinflation. It's inevitable. And the hyperinflation is the real destroyer. But we're not there yet. I think it's a couple years out before we're really going to get into it. But we're in the period where this reaction that they're going to have to do this time they're going to surpass their wildest dreams. Their dream is to get 2% inflation. Well, they're going to get 10%. Or 20% from this next impulse of money. And so you're going to start to see the real inflation. But, then it'll hit the end of the line. It'll deflate again. We got one more probably coming ahead. Maybe a year, 2 years in our future. It'll deflate again. See, it's in this cycle. Then it'll take 10 times more money. That's when they'll trigger the hyperinflation. Each time it takes 10 times more money. You just can't keep building these piles of money without it sending... this first pulse that happened in 2008 sent things like artwork and fine art and different things like antique cars and stuff to the moon. It blew asset bubbles in real estate and everything else. This time when they do it, it's going to reinflate these bubbles only bigger. And it's going to drive certain asset classes to the moon. And this time, I think it's going to carry up the price of gold, silver, and cryptocurrencies. But we're going to have to suffer through this little deflationary period. And you might get your best values or best bargains on cryptocurrency in this deflationary period. Because this is what's already affecting the cryptocurrency price. We were getting ready for a big increase in price. And it's not going anywhere. In fact, it's going down a little bit. But it's not being hit like gold and silver. Look at this. Smackdown, So it's proven more resilient than gold and silver, which I find to be absolutely astonishing. Considering that gold and silver, at the end of this Ponzi scheme, considering what's going to happen to gold and silver, I'll say it in one word: the moon. You know, at the end, when this Ponzi scheme finally cracks up and we go into a hyperinflation, the moon for gold and silver. And gold and silver's not holding up as good as cryptocurrency. That means the cryptocurrency's going to wing right on by the moon. It's going to head to Mars. Bye-bye, guys. You guys have a great day. Give me a thumbs up, and we'll catch you in the next show.